Good morning, everybody. How you doing? Welcome to Friday. Woohoo! TGIF, baby. It's Friday. Oh, I'm so glad to see that. We have survived almost another week, 4 days down, 1 day to go. Today is Friday, May the 21st, 2021. I welcome all of you to the show. If I buy 100 shares of, say, NOK and write contracts, is that a contract? Yes, you can write one call contract against 100 shares. Exactly. That is correct. If you own 500 shares, you can write up to 5 call contracts. You can write one call contract at one price for a certain day. Let's say you own IPOE, you own 500 IPOE. You could write one call contract that expires tonight. You could write one call contract that expires next Friday. Another one expires the Friday after that. One expires 6 months from now. Whatever you want and whatever exercise price you want. Each contract will have its own price, will have its own symbol, and you'll then be carrying different positions going forward. There it is. Is there a fixed bid-ask price for selling a contract? When it comes time for me to sell one, do I set the ask or is it based on the market? Yeah, you can offer it at whatever price you want, but when you're looking to create a call contract, you're going to write one, you're going to know what the market of the contract is. You're also going to notice, where it's been trading at lately. So depending on which firm you use to do your option writing, they may be able to show you a graph or a chart on the history of that contract. Obviously, you're long the stock. If you're writing a covered call, you know how the stock's been doing lately. And so you're going to have in mind a particular exercise price that you're going to want to, utilize. And so you're looking at contracts, maybe, let's say with GameStop, if you're thinking of writing a call contract at, say, $200, you might be looking at 5 or 6 contracts with a $200 strike price. You're looking at contracts that maybe have 2 weeks to live, or 3 or 4 or 5 or 6 or 7. And you're going to see the price of each contract is different because the longer the contract has to live, the more value it has, even if it's out of the money. And you're going to ask yourself, how far do I want to go out to offer my shares at a set price and versus how much I'm going to take in? And so it's this back and forth. How much money do I want? Does it pay me to write a longer contract, or is it just as much money on a daily basis in my pocket to write a 2-week contract versus a 2-month contract? And there is this sweet spot that you might say to yourself, I'm only going to write 3-week contracts, 2-week contracts, but I'll use a closer in price. I want more per day. I want more money for every day the contract has to live in my pocket. And there are, 190s, 195s, 200s, 205s, 210s. You're going to look at all these contracts and you're going to figure out pretty quickly, okay, I kind of know the contract I want to write. I know what price I want now. The bid ask, if it's $18 to $19, you might offer it at $18.95 or $18.75. Do not just hit the bid. If the stock is dropping, hit the bid. But if you're noticing your stock coming up, like 176.73 right now, it's 176.27. You want to write 190 contracts good for next Friday, and the value is $8.50 to $9.50. You might offer them at $9.45. You might offer them at $9.85, even higher than the offer, because you're watching the stock come on, and you're just going to try to catch a top price on the way up. Right now, up 6.87 on GameStop at 177.36. You might say, no, I'm going to offer them at 10.44. I'm going to offer them at 11.14. You might pick a price that's a buck higher than the offer, because you're watching the stock take a bit of a run right now. The bid ask is going to shift. It does shift all the time with the stock, up and down depending on the stock. And if GameStop is going to take a run right now to 180, 182, maybe you can get a buck or two higher on your call contract. On the other hand, if it keeps running past 180 and into the 185 range, you might decide, I'm going to write 200s, because forget these 190s. I'm going to the 200s. And you may not get as much money per contract, but you're going to get a higher payout because it's a 200 versus a 190 exercise price. This is the stuff we go over in private to try to figure out how to do it and what works for you, your risk tolerance level, income requirements, everything. We try to figure the whole thing out to make it work for you. Not that I'm complaining, but why aren't people more aware of SPACs? Who's hiding them and why? There's so many outfits out there who've just slammed the SPAC game as a speculator's dream and are basically saying to the market, if you're playing SPACs, you're an idiot. That's what they're doing. And I can tell you that why would any broker, any investment advisor want to talk to you about SPACs? I mean, let's get with reality here. You have less than $100,000. You're not going to get a stockbroker who wants to spend a minute with you at all. You're not worth it to them. If you've got 100,000 or more, they're going to only want to talk to you about their in-house funds that are managed by their money managers. And these guys are getting a 3% commission under the table for your 100 grand. They're going to say to you, if you buy 100 grand of our stock growth option, blah, blah, blah units, there's no commission as long as you hold it for 2 years. After 2 years, you can trade it all you want. Well, the reality is there is a 3% finder fee being paid to the broker by the managers of these funds because their thinking is that you are being charged a 2% fee as part of their fee to you, which is charged to you 1/12 of the amount per month. So at the end of the year, over the year, you're being charged 2% of the value of your money. And that's 2% this year, 2% next year. That's $4,000. And the manager of the deal is paying a $3,000 commission to the broker who brought the 100 grand in up front. So they're giving them $3,000 up front, but they're going to get $4 grand out of you because if you don't sell in the first 2 years, that's what they get from you. And you're being told this is a long-term investment for the next 5 and 10 years, nothing to worry about here. So all these hidden fees are being made and paid out. And this person you're asking, hey, what do you think about the IPOE SPAC? And they're going to go, oh, that's highly speculative. And for your situation, that's not the kind of investment you should be getting involved with. You should be getting into high growth stock units or in dividend group or growth and dividend or international group or we have investment units in high tech, software, retail, index funds. We have all kinds of funds that we can get you into. It's all in-house stuff. If they split you into 10 of them, $10,000 each one, they give you this wide portfolio and they sell you with all this great coverage you have. And then they want you to go away because they just want that money to sit there and compound. And you're paying a 2% management fee and they make you 6%, 2% comes off the top to them, you get 4%. At the end of the year, they say, congratulations, Mr. and Mrs. Galotz, you just made 4% on your money. And you're growing, you're getting richer, it's great. Yeah, well, 2% of that 6 went to them. They just took a third of your profits. And they've already prepaid off the guy who brought you in the first place. And the guy who brought you in is supposed to bring in $1 million a week, $2 million a week, $5 million a month, whatever the quota is for that individual. They don't want to talk to you about these stocks. They don't want to talk to you about any stock. They only want to talk to you about these units that they're flogging because they're under unbearable pressure by their managers to raise cash and put it into these house accounts that we're managing because that's how we live as a firm. Now, the 3% that comes to the broker, he doesn't get the 3%. He gets about 40% of that, maybe 50% of that. The other half goes to the house he's working for, the branch that he's working at for their overheads to be there. And this individual is making maybe on your $100,000, getting $1,200 in his pocket before tax. He hasn't got any time to talk to you. After tax, he's only got $700. How much time has he got to talk to you? You're only giving him $700 for like the next couple of years to lock this money in. So $350 a year net, $7 a week. How much time does this person have to talk to you? No time. You're too tiny. This is the reality of the situation. So you're listening to me and you're hearing these stories about these stocks and you're saying to yourself, I can do more money. I can make more money for myself just doing this stuff than doing that. I'm getting 4% from those guys. Bruce can make me 10% a year. I'm making more money and I'm self-managing my wealth. if he can help me write contracts on stocks that I'm sitting on, that they're just sitting here, and he can help me make 3% a month on premiums on my contracts, I'm making $3,000 a month with this guy. Why don't I pay him $400 for an hour of his time and talk to him about this? Because my broker is useless. I have no competition. I mean, that's what I'm telling you. I have no competition for your time. But I don't own an investment house. I'm not here to sell you this product. I'm just here to tell you what's going on in plain English and help guide you down the road how you can perhaps self-manage your own wealth. And how many of you am I talking to that have $30,000, $70,000, $100,000, $400,000, $2 million, and you're not getting serviced? You're just not getting. No one wants to talk to you. It's incredible. The SEC has allowed all of this to go on, and here we are, down the road. It's just unbelievable. Say after a squeeze and a great return on stocks, would it be crazy to have $3 million and have that money make $8,000 to $10,000 a month and basically live off of that? Look, if you've got $3 million, just buy IBM, bring in 4.5% yield. You're bringing in $12 million a year. Bringing in $120,000 a year, $10,000 a month off dividends on average. Enjoy. Low tax rate because it's dividend income. What's wrong with that? Nothing. Now, if you're going to write some contracts against IBM, call contracts on top of the dividend, maybe you can pull in another 10% a year on contract premiums. That would be $300,000 a year plus your $120,000 dividends. You're now bringing in $420,000 a year. Can you get by on that? Can you income split that between you and your wife? Perhaps you and your wife and your children? Can you put that into an LLC and then write off legitimate expenses off the top and pay tax, corporate tax on the net, and then pay yourself a base salary at the lowest possible tax rate, and then perhaps the occasional dividend bonus? Is that the way to go? Possibilities are endless, folks. You need to do 30-minute sessions instead of $400 an hour. Can you do $200 for a half an hour? Is that what you're asking me? I don't understand what you're saying. Now I understand. I was actually wondering about something. I'll ask you this right now. A few of you are still here. What are your thoughts if I were to put together? I was thinking of putting together like some kind of a maximum of maybe a maximum of maybe 100 people for a private telecast for a set price. I'm not sure what the price is. I'd have to figure that out. I have to figure something out. But it would be maybe like a class, like a 100 person maximum class, where you are invited into a webinar kind of thingy that I would get figured out, and you're paying an admission to get into the class, and then I would be there talking today, say for an hour and a half, 2 hours. I will talk about how to write call contracts, or looking at option chains and trying to figure them out. Answering questions with just like 100 of you, just a smaller group, something like that. I've been tossing this back and forth. I've had this suggested to me by a lot of people on my emails, and I'm just kind of wondering if any of you would have an interest. If you're looking at maybe $50 to attend a 2-hour session, where there's a restricted group of people. So instead of being together for an hour for 400, you're with me for 2 hours with a larger group for like $50 or something like that. I would need a few hours to prepare for something like that. I would then do it and then see how it goes. And I don't know. I'm just asking. I don't know. I'm just curious. What do you think? Thank you, everybody, for that. If you'd like to talk to me about a 1-hour session, you want to get together with me, send me an email through my email address, which is right here. It's the old school hotmail.com email address. Send me an email. Say, Bruce, I'd like to talk to you on a one-on-one session. When can you book me in? I'd like to make a reservation and lock it in right away.